Hey people, you're watching Bull, Boom, Bear, Bust. And it is true, we're not getting out of 2023 without a major collapse of the U.S. consumer. We're already seeing the U.S. consumer collapse in many different areas. Look at the debt. But now it's not just me saying that. Article out here today, USA Today, a credit crunch is coming as banks slow lending, brace for impact. Folks, banks are preparing for a tsunami of defaults and late payments. Now, first, let's go back to last month after the bank collapses happened, and we heard from Jerome Powell. And let me give you that quote here. The Federal Reserve warned last month after the collapse of the banks, said upheaval resulting from the banking sector would likely result in, here's the quote, result in tighter credit conditions for households and businesses, which would in turn affect economic outcomes, unquote. Also, issuers of credit cards have raised the interest rate on these cards to the highest level of all time. And they're pulling back on rewards and points in travel miles and air miles. And I've got some numbers here from Wallet Hub. The average interest rate on a credit card climbed to 20.92%, the highest since the Fed starting tracking the information back in 1994. New credit card offers carry even higher rates, averaging 22.15% in the first 3 months of the year. That's up from 18.32% at the end of 2022. Also, according to this and multiple other sources, credit card reward offers are dropping. So what is happening? What do the banks see? What do the credit card companies see on the horizon with the U.S. consumer that has them pulling back on this lending, raising interest rates so much? Well, ultimately, there's likely to be a pivot in the Fed funds rate, and therefore maybe we'll see some lower interest rates on the credit cards. But I think it's too late. I think the damage has already been done. But if and when they do pivot, that's when you're really going to see inflation explode. And of course, precious metals, I think it's going to explode with it at the same time. And that's why you need to prepare. So a quick word from our sponsor here. Then we'll get back into the news about the banks and the credit cards and how are they bracing for impact.
Noble Gold Investments have made it their mission to stay on top of the most important economic news. 3 bank runs in the last month. These are the second largest and the third largest bank runs in history. The government is taking steps to guarantee all deposits. That means more money printing. Plus, the Fed is sitting on unrealized losses of $1.2 trillion on their $8.3 trillion bond portfolio. And the Fed could continue to raise interest rates until they crash the economy. Do you know who are the only ones that are not afraid? The ones who are invested in gold with Noble Gold Investments. Gold is the most stable asset outside of any government control. Thousands have approached Noble Gold Investments to get their hands on gold. Hurry and go to bullboomgold.com to secure your wealth now. Bag a free 5-ounce America the Beautiful coin with each gold or silver IRA if you qualify. Go to bullboomgold.com. That's bullboomgold.com. The link is also in the description of this video.
Here's what's happening, folks. Banks are lifting rates, scaling back perks, and tightening lending standards to offset their increased risk and minimize loan defaults as recession odds rise and more people lose their jobs. And this is out of the Congressional Budget Office. The Congressional Budget Office forecasts unemployment rate will rise to 5.1% by the end of the year from right around 3.5% where we're at right now. So it's not just me saying that anymore. We've got the Fed out there saying there's going to be a mild recession. Of course, they're going to say mild, because they don't want to alarm people. They don't want to, make people more concerned than they already are. But now you've got the Congressional Budget Office out there saying unemployment's going to almost double by the end of the year. I think these entities, they have to at least start acknowledging some economic reality. Otherwise, they're just going to get laughed out of the room. So that's where I think we're seeing these predictions and these forecasts, even from people in high places, who are not really supposed to sound the alarm because they don't want to trigger the economic decline, by startling. And like I was saying before, I really don't think we're going to get out of 2023 without everyone realizing how bad this situation really is. In fact, here's some more numbers here. In the final 3 months of 2022, credit card balances increased by $61 billion. That's to up to now $986 billion. That surpassed the pre-pandemic high of $927 billion, and that was the largest increase in a quarter since 1999. So we're worse than the financial crisis, 2007, 2008. This is going back over 20 years. This is the worst. And moreover, more than 1/3, about 35% actually, of those carrying credit card debt carry a balance from month to month. That's also up a lot. That's up 29% from last year. So more people skating the economic cliff here, trying to walk the the fine line, so to speak. Additionally, credit card borrowers, especially those under 40, are missing payments and becoming delinquent on payments by more than 90 days faster than they had before the pandemic. Quote, it's triple trouble for credit card borrowers. That's Ted Rossman from Bankrate.com saying, it continues, quote, balances are up, rates are up, and more people are carrying credit card debt, unquote. Also from Cox Automotive, auto loans are flashing warning signs. The number of loans 60 days past due in January was up 20.4% from a year ago. So folks, the writing's on the wall. It's going to hit the fan this year in 2023. Now, yes, some of you say I've been talking about this for years. It never happens. Well, if you think it never happened, what happened in 2020? Why did over 7 million people have to have mortgage forbearance, right? So if the consumer was strung, why do we have to have all these rescue programs? Why the mortgage forbearance? Why the rent forgiveness, the renter protections? Why do we need all this? Why do the loans have to be frozen? Talking about student loans, why do we have to have a freeze, a nearly 3-year freeze in student loan payments? Why are we talking about discharging tens of billions of dollars of student loans? Because people cannot pay it. And I still have a couple people that email me, JJ, you're wrong. I went to the restaurant. The restaurant was packed. All these people have money. First of all, ask yourself, how packed would these restaurants be if these people didn't have credit or credit cards to swipe? If they couldn't go into endless debt? The system of money that we have right now, this fake money basically is what it is, where banks can loan out money they don't have. This is what causes the rising cost of living. It's what's making everything so expensive. Think about if people couldn't take out loans from banks. Think about this. If banks had to have the money in the vaults, so to speak, that they loaned out, meaning a 1-to-1 ratio, they couldn't loan it out unless they have it. Actually, I think it should be 2-to-1. They should have 200% of whatever they loan out. That way, there's always going to be a backstop, and there's not going to be any bank failures. The cost of living would crash. Home prices would crash. The cost of automobiles would crash. The cost of living all around would crash because less people borrowing money is less people buying things. That's less demand, and prices would naturally come down. But of course, there's the powers that be out there that do not want that to happen because they make money in the back end. They create the boom and bust cycles, and ultimately they benefit from it. But if you really wanted to stop inflation, that's all you would have to do is just make the banks have the money in deposits that they loan out. That's all. And to even take it a step further, you can go back to hard assets backed money. So therefore, even the money that's created or printed couldn't be put into circulation without there being the asset behind it. That would even further shore up this economy and make the cost of living come crashing down. And ultimately, I think that's where we're headed. It's just going to be a matter of time. And we have to get through a lot of this current economic turmoil before we get there. Because have you ever heard the expression, you have to hit rock bottom before you get back up? I'm paraphrasing that. I'm not a big quote guy. I like to come up with my own quotes. But I believe it's something like that. You have to hit rock bottom. And I went ahead and looked it up because I know some of you will get on my case. Here's a couple of the quotes. Sometimes you have to hit rock bottom in order to change. I think that's the most relevant one here. Another one, when you hit rock bottom, you'll have nowhere to go but up. And sometimes people won't wake up until they hit rock bottom, until society collapses, until the economy collapses. I thought that people would have woken up after the 2008 financial crisis, when homes crashed, 50 to 60% here in California, even more in some areas. And everybody knew that it was the lending that caused it, all the money being given out to people that really should not have bought homes. But now here we are giving out even more money to even more people in various forms, not just mortgages, but credit cards, auto loans, all these subprime lenders, and some of them are going under. See our last report about the subprime lenders now pulling back from lending. So 2023 is going to be a wild ride, folks. So fasten your seatbelts. Every time I read the news, it further indicates that we're headed into this economic situation here this year that I think we're going to be telling our grandkids about one day. If you have kids, to have grandkids. A lot of people are scared to have kids because everything's turning into such a chaotic mess here, financially, economically, and it's going to affect everybody here. So we're going to wrap this one up. What do you think about the credit card companies being more restrictive on their rewards points? What do you think about this debt? The warning out of bank rate that it's a triple threat for borrowers as more and more people every month are unable to pay off their credit card. Again, if the economy was so strong, if the consumer was strong, more people would be paying off their credit card each month and you would see the number dropping. But instead, the opposite is happening. More people not paying off their card in full each month, and the number of people carrying a balance from month to month continues to increase. And that can't last forever, folks. It's not going to last beyond the end of 2023. I think this summer, this fall, it's going to hit the fan. Maybe some big distraction will happen to take everybody's eyes off of the numbers we've been talking about today. Could be a war. I wouldn't be surprised to see the United States involved in some major conflict because that's how bad things are getting. That's how bad things are getting globally. But I will be here to ride the storm out with you, and we'll get through this together. We will be fine because we're on top of it. We see what's coming, and we're prepared. So everybody, thanks for watching. Please let me know what you think down in the comments. Big love. Keep stacking.